Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for Tuesday, the 7th of January, 2025. All right, my friends, we're at the point where one of the traditional, if you will, adages goes with the first 5 days of January set the tone for the year. I don't know if that's true, not true. What I do know is when you go back and you look at the statistics, if the first 5 days were up and you go back to the 1950s, there's a strong probability of that happening. You know, down years happen and so on, but that's it. You're also fighting right now, literally right now in the evening trade in the S&Ps and the others, will you have an up year? And this is based off the S&P. I even carried it to the Dow. So if you go to the financial market page, you'll see that. Do I know if it's right? No. Do I know if you're up in the month of January, it has to be up the rest of the year, you'll end up higher? No, but there's probabilities about all that. Does the Santa Claus rally work most of the time? Yes. Did it work this year? Absolutely not. So you got to take it all a step at a time. Today we saw President Trump take to the airwaves, and of course he wouldn't answer questions about using military threat to take back control of the Panama Canal and so on. He didn't say he would. He just didn't answer the question, would he? So these are the things you're dealing with. You're also dealing with President Biden laying traps for him everywhere. Now you can't drill off the Florida coast, California coast. It's more and more things. And they'll be very difficult to overturn. As much as the president-elect says he'll get them done, some of these things do require some, not all, Congress. All right, those that are just presidential orders, he can overdo those right away because, like his own were turned over by Biden, he can turn back the ones that Biden puts on. So we have to remember where you're at. You have to look also at the fact that the market is sitting here with interest rates now at the 4.69 level in the 10-year. You're over 4.8 in the 30-year bond, and the market is concerned about this. You know, I hear pundits saying, of course, get over 4.75, you're going to nosedive these markets, 5%, the killer. Could be. It's first week of January. We haven't had a full week of trading, and you won't this week either. You've got Thursday, the market's closed for the observance of President Carter's passing away. So all these things going on make this a very difficult time. And if you feel like you're getting whipsawed, you are. All right, that is what this is about right now. You saw Nvidia come out this morning. First thing that did, it jumps right away. Big up move. I'm watching the stock take off, and then I turn my back. I look later, and I swear, it couldn't have been 5 minutes. Okay, now it's unchanged. 10 minutes. Now it's down. So the hot money went in to see what Jensen Huang was saying. They saw what he said, and right after that, they sold. Buy the rumor, sell the fact. That went to work. Did it change anything on the company? Not a darn thing. But so many markets are priced for perfection and overpriced. You have to have an economy that runs, which brings me to the JOLTS report. So we had the JOLTS report come out, and now you've got 8 million plus jobs that are out there being offered. That's not weakness in the economy. So the question is, if that's not weakness, does inflation start falling? If inflation doesn't fall, I would say the Fed's hands are tied and they can't do anything. So is the market super concerned with that? Yes, but they shouldn't be. The simple fact is interest rates are up because the economy is strong right now, not because it's weak. All right, we're going to get, and let's start this in the right way. Here we go. You're going to get, first, you started off today with the API stocks. They came out this afternoon, and there was a decrease in the storage number, but you had increases everywhere else in the products. You're going to get the Mortgage Bankers Association at 6 a.m. ADP, going to be an important number. They're looking for about 100,000 less than the last report, from what I understand. I think 130,000 is the number they're looking for. That's at 7:15. Jobless claims, what are they going to do? As you know, they haven't been falling the way that we've thought week upon week at the beginning of the year. We'll see if that changes. Wholesale inventories and sales data. Then we're going to get the EIA numbers come out in energy against what we just had in the API, and then we're going to get natural gas numbers, and this cold weather should be interesting. While they're looking for a smaller draw, you've got terrible weather coming through. Are you aware that the Santa Ana winds are back and everything? Pacific Palisades had major in California evacuations this afternoon, and now they're expecting wind gusts could hit there 100 miles an hour, fanning flames. 700 acres went up like that, and as I understand, they're still burning. So we will see what goes on. You're going to see that I'm going to offer you free offers, all of them on our website. You just click the offers you want when you go to iraepstein.com, free offers. You can move your cursor through the top of this at any time and take advantage, because we're going to write about these reports that are all coming up. And you know what you're going to get this week? You're going to get the jobs report as well. That everything's pushed around because of Thursday's close, but Friday we will get that. So let's continue with BROS. What we had now is a key reversal outside day down. It's two elements. What makes it a key reversal, just an outside day down? A key reversal comes in at the low or high point of a market run. This is the highest high that you've made. You took out yesterday's low and high. So from my perspective as an outside day person, I say that if today's high is taken out either on Wednesday or Friday, the next two trading days, then it's a bear trap and the market looks to go even higher. If it's not taken out, where might the market go? Well, you look to see where the swing lines are. You can see you got higher lows, higher highs. That's bullish. I then go to the 18-day average. This could be the target if it just wants to pull back, the 5,400 level. Why is the market stopping here? Most likely because it hit the upper Bollinger Band. I'm going to repeat. In Bollinger Bands, markets trade within them 95% of the time. However, they break out of formations like this when the markets narrow it in. You narrowed in, you stayed narrow. That's how you break out of the bands, and you have to get over the band to move it out, and then it pulls back in. That's that 95% factor and works its way. Keep your eye on formations like this. It's all taught in my charting courses. And that sale's over, but I just want you to be aware of it. You're overbought. So you have an overbought market, went to a new high for the move. The market around it's falling. You get an outside day down. That is not bearish. It's a sign that the trend needs to probably consolidate the gains it's recently made. When we look at Oracle, just yesterday I told you I thought this market might make the run to the lower Bollinger Band. It's now was using the 100-day average. It tried to find support. It moved back under it about a week and a half ago, couldn't go anywhere, and now right on down. This is finally where I think the market will try to make its, if you will, bigger support move. Between here, maybe the 148.77, about $14 lower, the 200-day average, if traders start throwing in the towel on market upon market because they get nervous in these markets. When we look at CrowdStrike, while it came back up, look what it's done. It too has an outside day, but not a key reversal. This is just within the range of the prior moves, and the market's in a stall. Where? Just what we talked about. I see sideways action right here. None of these markets have set up a new buy yet, which is interesting. This can be at least the way that I look at the market, and I can share with you, I have not told my subscribers to deploy new money in the SPDR ETF yet. We haven't had a new signal to come in. You have a lower low, higher high in the Rivian. Don't see a trend trade. If it drops further, look for support at 14.17, but not necessarily a buy zone there. I am still bearish as can be on China. K-Web down, outside day down. If it wants to finish this off, maybe you get to the lower Bollinger Band. But you be a little bit nervous here. And the reason is that it's the first move under the 200-day average. You are embedded, so you're not oversold. You've locked in the bear trend. And I have been adamant how bearish to be on the Chinese internet ETFs and the like, and I think that has proven to be a smart move. Toll Brothers, how can these stocks go up if interest rates keep going higher? That is the question you have to ask yourself. I don't have the answer for that. So as good as the companies may be, no. If interest rates keep moving higher, they come under more pressure. The market will tell us when it's ready to abandon that thinking. It has not done so. As long as it stays under the 18-day average of closes, that's what I would keep. And look at how, when you had the bearish crossover here, the market stopped its rally, could be headed back here to 98.79. If tomorrow's numbers come out in such a way, and the jobs report, which show real strength, you would say that's great for the economy. It is, but it also means higher interest rates are coming. Is the market able to digest that without stock prices falling down? Because stock prices have, relatively speaking, some very high PEs in a number of sectors. That is something you got to ask yourself. In the XLF, all you did is rally up to the 18-day average, the resistance point, and you fell back in the financials. It's not ready, from my perspective, to do much. You had a buy signal hit the market on the swing line, but all it did is carry where it should have, to the neutral number of the 18-day average and stall out there. In XLI, you've lost the bearish embedded reading. So my works theory is, before you take out this low, price and the 18-day average will likely come together here. We'll see if that is the truth. In XLE, higher lows, higher highs, big time resistance. So as much as energy's been moving up, I doubt it's going to have ease in getting through these numbers. It's also overbought, so it would have to get embedded and keep going in order to do it. I don't see that right now. In GLD, gold is acting okay. I think the pros are nibbling right here, but when I see this, that you got a 73 reading, I view any number over 70 when you're not embedded, where both numbers, the blue and the red, are going sideways over 80, is overbought. Overbought doesn't excite me. Just the way, on the way down, getting short on an oversold, getting long on overbought, I'll let the next guy do that. Silver market's void of a trend. You've got a lower low, higher high. You have a market that gave a bounce off of here, corrected an oversold condition. Copper market, still in a problem. All you did is rally to the 18-day average. China hasn't changed anything. So I see that the market needed to correct. It's got that going on, present tense, going on. Both numbers are now above 30 at this point. China has to do something in order for this market to come alive. Why China? They consume 50% of the world copper. So with that, where else? Well, that pretty well takes us to the bonds. And in the bond market, lower highs, lower lows, so still the bear camp there. That hasn't changed. Dollar catching a bit off the high rates, strong economy, but it's under the 18-day average. It's got this whole gap to fill. Untradeable from my perspective right now, but I'm still bearish in FXE and can make arguments that it should go down even further. Reading more and more reports of people that think later this year parity level with the dollar could be on the agenda here. So you put it all together, you try to come up with ideas, and that's what we do. That's what the free offers you're getting from us are. Again, move your cursor up here, go to iraepstein.com, choose your offerings, and I'll catch you in the morning.